Hey traders, Britton Brown here with TradeHive. Wanted to go over the COT report. Today I'm going to go over the TradeHive blended ES NQ Big Money COT report for the week ending February 10th. Today we're going to look at this blended ES and NQ Big Money visual because this chart is going to answer one question every trader should be thinking about or caring about, and that is who's in control and how aggressive you should be this week coming up. As I said, today is February 15, 2026. We've got a holiday on Monday, so things should be pretty exciting on Tuesday. But I also want to point out, this is not an entry tool for you. This is your weekly risk and conviction framework. So I'm going to flip over, show you the graph that we have, and try to make some sense out of this for you, and teach you how to read this chart. Now, for me, if you go over to the website at TradeHive, I break down both the ES and NQ separately, and I've got all the information you would ever want or need when you evaluate the COT report. And if you're not doing this, if this is your first endeavor at the COT, Commitment to Traders report that comes out every Friday, this is where the big money is positioned, and you need to understand that where these players are coming or going and whether they're getting out or they're pressing forward. This can make you a lot of money and give you the right bias for the week. So the reason I do a single chart is once I read through everything, the idea is you go through it, you understand it, you understand what's happening. Again, they're two separate markets, but they're very much correlated together. And so right now we've got a lot of different things happening on both sides, but we want to know what those things are. And ultimately, as we go through this, the point here is that once I know what's going on internally, I can come back to this chart, and I keep this handy all week. It just is a quick refresher. And once you know how to read this and you understand what you're reading, you know what these big players are doing and positioning themselves with. So let's go over this, how to read this chart. It's a big picture, and this chart has two jobs. The first job it has, the top panel tells us how much money is involved, and then the bottom panel tells us which side that money favors. So when you understand both together, you're going to stop guessing and start trading with alignment. And that's incredibly important, so you quit fighting what's happening and you get on the right side of things. So when you look at the top panel, it's normalized participation, it's blended ES and NQ. What it measures in plain English, normalized participation answers one question: is real money entering or leaving the market across ES and NQ together? Now, raw open interest alone can mislead because ES is massive and NQ is smaller, so those contract sizes are going to be different. So what we've done at TradeHive is I've normalized both of those. And what normalized means is each index is scaled to its own recent range. ES and NQ are blended together. Contract size distortion is totally removed. So for me, I don't care which index is bigger. I care where money is stepping in or stepping away. How do I interpret this, right? So think of it like this: rising participation, expansion. It's trend fuel. When we see flat participation, it's consolidation, digestion. And then we have falling participation, that's de-risking. So what I want you to remember is participation doesn't tell us direction. It tells us conviction. So my current read right now when I'm looking at this chart is participation is stable, but it's slightly cooling. And I want to be very specific with this. That does not mean it's risk off. Okay, it just means digestion in the marketplace. Now let's talk about the bottom panel. When you look at, there's three panels, but I'll call it the middle panel, right? Because the last one that you're looking at is the TradeHive Risk Regime. So when I say the top and the bottom, I really mean that the top one and the middle one, because those two go together. The Risk Regime Index is separate. But with the bottom panel, you're talking about blended big money pressure, and that is a core signal. This is the most important panel on this chart. What big money pressure represents is big money pressure shows which side institutions are leaning structurally. Now I'm not saying it's not day to day, it's which side the institutions are leaning structurally. So it blends the asset managers, who are the long-term positioning players. It blends the dealers, who are your hedging pressure, and it's going to blend the leverage funds, which is momentum and squeeze risk, and of course open interest for confirmation, all combined into one regime line. So again, this is not an entry signal, this is a regime filter. So let's understand the zones real quick as we look at this. When I say a bullish zone, that is equal to or greater than the 0.15. And you can see that. Let me just kind of move my mouse over here. That is right here. Anything above this level right here is bullish. Anything below down to 0.5 is going to represent compression zone. That's chop, that's traps, that's mixed positioning. And then the risk zone is that 0 to 0.5 and below, called zero delta. We are positive delta when you look at this. So this is the most important piece of this chart information for me on a daily, for the week situation that we're dealing with. So risk zone is distribution or defense. So right now, like I said, the current blended big money pressure is sitting at 0.22. That's a positive 0.22 delta. That means we're firmly bullish. It's not euphoric. It's not accelerating. What it means is institutions are still in control, but they're no longer pressing. Now, when we look at the TradeHive Risk Regime Index, and that is a weekly score, I just started to blend this. So what you'll see moving forward is, and it's separate when you look at the individual contracts themselves, but as we move forward, I'm going to dot plot this for you. And this gives us a snapshot, basically, where the institutions are sitting. All right, so based on a blended data, institutions are net long in ES and NQ. The hedge funds are covering shorts right now. That is really important to understand. And there's two reasons why. If you go through the individual reports, I believe I mentioned specifically when those hedge funds start to cover those shorts, you are taking away squeeze opportunities. Those are those big shooters, that just take off with the market, right? So that happens when the hedge funds are overly short and then the market rises up against them. They got to cover. They will come with vengeance. Well, they're covering these shorts right now, so that's important to understand. The dealers are still hedged. Volatility risk remains. Participation is selective. So again, TradeHive Risk Regime Index 62. The basic market state that we're in is late risk on, early neutral. So this is now my official and your official weekly regime score that we can deal with on a week-to-week basis. It's a quick review. So putting it all together, it just clearly says participation tells us how much money is involved. Big money pressure tells us which side that money favors. And again, when you look at the decision framework, it's both are rising. When both of those well, look at all three. If all three are rising, you're going to press trades, right? That means if all three were going down, you're going to press trades to the downside. So pressure high, participation flat, trade selectively is the call for this week coming into Tuesday, or call it Monday night after the holiday. Both are falling. You get defensive. And like I said, right now we're constructive but selective. This is not a chase environment. It's a precision environment. So that means when you enter a trade, you better be spot on, because you could get washed out real quick. Be right, but they could knock you out pretty quickly. So in closing, let me just say, when we blend ES and NQ together, big money pressure remains firmly bullish. Participation itself is no longer accelerating, and that tells us institutions are still in control, but we're in a digestion phase, not a chase environment. And like I said, our TradeHive Risk Regime Index is sitting at 62, keeping us constructive but selective. I'm going to flip out of here real quick. Let me zip here. There we go. So again, if this framework is new, rewatch the video and focus on how participation and pressure work together. That's an edge for you, and we're all looking for edges. And if you want the full written COT breakdown, you're going to find it at tradehivecommunity.com. I'll also put specific links in the description of the video here at YouTube down below so you can access those directly. If you have any questions, shoot me a message. I'm happy to walk you through it. I wish you all the luck this week. It should be an exciting week of trading. Certainly the last 2 weeks have been volatile and amazing opportunities to be trading both on the scalping side and on the swing side. So appreciate your time. You guys have a great week. Enjoy the rest of the holiday. We'll see you on Tuesday morning.